Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. This is Tariff Day +1. And the market is responding. And we're going to discuss it. This is what having a trade plan is all about. And as the preparation meets opportunity, if you have a plan with a statistical edge, and this is what the Trader Lab is all about, we have the opportunity, of course, take some risk, of course, to get the opportunity for substantial profit. And of course, past performance is never indicative of future results, but we're going to go into these structured trades, and these trades are available to everyone in the Bookmap Discord Trader Lab community. Also, please be advised, I am streaming from Costa Rica and on an unstable infrastructure. If we have substantial problems with this, I might have to drop out of YouTube, but the stream will be posted later for your review. And this is definitely a stream you're going to want to review, because I'm going to be sharing with you Trader Lab structured trades. And the idea of Trader Lab is to help you understand market mechanics and how to integrate Bookmap Orderflow tools with auction market theory using a volume profile as a chassis to overlay structured trades on. The Trader Lab's a community of like-minded traders who come together to leverage their collective experience. And the Trader Lab is available to everyone. If you're visiting in YouTube, there's a link down there. To access Trader Lab, there's no cost. There's also a library of webinars and a substantial document section to help you understand how the market works, why it does what it does, and how at times to get in alignment with it. And the business of trading really is a statistically based business. It's not a predictive business. And the fallacy for most developing retail traders is looking for certainty in an environment where it doesn't exist. The environment we operate in is like casinos operate, that is gaming, and that means only playing games that have a statistical edge. Being in a environment that's 100% random 100% of the time, you cannot, in my opinion, solve for certainty. You need to solve for randomness, and you can, if you come to Trader Lab, do the work and actually create a trade plan that has a statistical edge. It's no different than casinos, the way they play their games, even though they pay the gamblers. Every business has overhead and cost of production, but over time they extract the dollars from the gamblers. Now, the problem for us is we also have winning hands or winning trades, but we don't have an edge. We're going to end up paying the gamblers. And of course, that's not a way to achieve sustainability in the business of trading. So if you're interested in learning the business of trading, you have an open invitation to Trader Lab. This is what the structured trades look like. You can download these, plus there's a library of webinars. It's about you having the opportunity to reverse engineer these ideas. These are trades, actual trades I've taken, and other trades I screenshotted. It was really just the basis of an idea to help traders understand basis of how trading works, and then to build out a plan. Now, I'm going to share with you structured trades. Now, these are not trade recommendations. Everybody takes stops. I'm going to suggest in the most sensitive way possible to get over it, because every business has overhead and cost of production. So let's take a look at the first trade, and I'm going to explain it to you so you understand why. Now, I post these on Trader Lab when I can, and I don't call trades. It's a waste of your time to be in a trade calling room. You know, you might as well just give your dollars to an advisor, and hopefully they have a good track record. Otherwise, you're just playing a video game, or you're an illusion of being a trader. You're not a trader. You need to learn to trade. That's what the Trader Lab is. Not everybody wants to learn to trade. For whatever reason, there are many individuals who just want to click the mouse and get the dopamine fix. Trader Lab is really here to help you understand the business, build out a trade plan, and operate like a casino in the sense of only interacting and taking risk when you have a statistical edge that favors you, and still the outcome is going to be random. So we cannot predict what will happen. What we have to do is know where we have an edge. It's no different than going to a casino, sitting at the blackjack table. They play the games the same way, and that's called anchored inputs. Trading is an anchored input business that gets And the idea is to get in alignment with the market, and certain trades will be qualified under certain conditions, and other times they won't be. That's why trading is not mechanical. It is something called contextual. And I believe anyone who comes to Trader Lab and does the work will have the opportunity to create a business. It doesn't mean you'll be successful, because you have to do the work, and you also have to learn about the psychological impediments to actually executing. It's a lot more difficult than you think. So you can learn these things and also be in a community of other traders. Now, this is the ETH. This is 8:30 Central Time, RTH open, but this is the ETH. And in the ETH, we have something, and I made these things up many years ago when I was trying to figure out what the heck is going on here, because I was just like you. We're all the same. You know, to me, it was indicators and time frames, and that somehow I'd get the right mix, and then fine, you know. Well, what I got was something called curve fitting, and I got winning trades. There's the problem. You probably think, gee, I want winning trades, and we all do. But the thing is, if you had no edge, you were in the casino, and you had a game that did not have an edge, you'd still win. But over time, you'd lose, because the gamblers would have the edge, not you. Does that make sense? So we all have winning trades, and we go on the quest to make it better. But if we don't have an edge, we're going to be paying the gamblers. And I hope that makes sense. Hope you guys are doing okay. Discord will break up from time to time. YouTube might be a little better. Either one. But this stream will be available later. So thanks for your patience. Let's get going. So we all know about the tariffs. We all know that is a disruptive global economic event. The market squeezed out shorts yesterday during POTUS's news event, where and so we made a new high, and then we ripped out and made a new low. So what does that tell you? Mechanically, if you will, from a market mechanic perspective, the shorts got thrown under the bus, and then the real move is the short. In other words, they got squeezed, and the real move is the downside, and then we reversed out, and major selling took place yesterday, and we have continuation selling today in a gap. Now, let's look at the first trades. You all know this already, so let's just get into structured trading. And this is Trader Lab process. And welcome to visiting the Trader Lab, guys. I'll do my best. Hold on. Okay, here we go. This is called the variable high volume node. It is, what I'm going to say is, in the ETH, this is where the highest volume was at one point. And the market moved away from it. And it's at 40. So what does it say? Let's talk about the market. The market speaks. And the thing about the market is, it is not necessarily speaking through our indicators. It speaks through participant behavior and the volume that happens or transacts at price. So what does it say? This yellow line says high volume. Now, if we have high volume, think of it like shopping in your store. It's a retail price. So this is something I call a variable high volume node. And this is before the market opens. Now, I'm going to show you a couple trades. And these are trades I posted in Trader Lab. Now, what is the Trader Lab, by the way? Besides being a community of like-minded traders who come together to leverage their collective experience. In other words, we're all in this together, and we all want to do better. And it takes a village, you might say. It's not, most of us in trading, we're under a rock somewhere. It's a very isolated business. You need to be with other traders who understand the challenges of this. When I talk to my wife about trading, the eyes gloss over. She does not relate to it. She certainly has heard a lot about it. So, two trades. Let me show them to you very quickly. So we have our RTH open here. So I look at a couple of things. So we open, of course, lower in a gap, and there's a couple possibilities. It's called responsive buying. What is responsive buying? It is if we gap lower and you are short going into POTUS's, or you sold it yesterday in the ETH or last night in the, whatever you did, you're short. Well, if the market opens lower, what might you do? You might respond. That's why it's called responsive buying. You're responding to the gap to lock in some profits. It is normal, anticipated, and also random behavior. So let's look at this. So first trade for me was RTH open, and these were posted in TraderLab. Come up, here's my responsive buyers, and I look here, I get a sweep and liquidity at 25. I'm looking the short here, just telling you, and I'm talking about this in the TraderLab. It's all posted in there if you want to visit the TraderLab. There's no cost. And then up in here, I have my full session VWAP. So I look at this, and I go, okay, this is mean reversion. This now is a developing volume point of control, retail, and it reflects the volume in here. Also, this is a sell sweep. Often, when we have a sell sweep, we get a potential reversal. I always use the word potential because that's all you have in trading. Potential. Well, when I cross here, now I'm looking for north. These guys, this liquidity pulls, I go, okay, I get VPOC migration. It's a term I made up, which says too low, retail. Next thing, I get a buy sweep. This suggests counter rotation. It's a potential trigger for a short. I have no trigger. I have maybe. I come up to what is the full session VWAP. Now I'm looking at call it a hybrid structured trade to come back here. This is called mean reversion. I posted this in TraderLab. This is a trigger right here. Sellers get under the buyers. Location. Liquidity comes in the book. Selling icebergs. And here's another little tidbit for you. This is the stop an iceberg detector. Now, and again, remember, this is all trade plan specific. And if this isn't your trade, you're going to be out here working on your crochet, waiting for the trades that you have vetted that have a statistical edge. You're not making it up. If you're making it up, you're playing a video game and you're a gambler. That's not a recipe for longevity. That's a recipe for exit from the business. And the objective of TraderLab is to help you understand the business you're trying to be in. Buyers are here. Sellers are here. These guys got absorbed here. And as the market is going up, 175 buy stops. Look, 2 buy stops. Selling icebergs, liquidity in here. Buyers are above the sellers. They are in control. 9 buy stops. Now, right here, and location. See? So I have location, think real estate. I've got icebergs. I got liquidity. I got buyers. And I have 9 buy stops. Right in here, I'm getting what I call stop divergence. It's the only thing I use from indicator world because I don't use indicators. I read order flow. It gets me closer to the real market. So that it's not lagging, it's not conflicted, but it is still random. So I get the same thing you get with your indicators, except I can read it here. So I can activate here. And with an indicator, I don't know what you're going to get. Some will say go long, some will say go short. That creates conflict. For me, not so much. So buyers are in control. This is stop divergence. 9, higher price, less of something. If I have divergence, I still don't have anything that I can act on. But now I'm seeing the pieces. Stop divergence is buy delta, stops come out as market orders, right? And they represent delta. So when you see delta, and I always like to just mention this, it's not red light, green light. Because delta has other components. It has aggressors, and stops are not aggressors, but they are measured as aggressors because they become market orders. So there's this, and okay. Now right here, the sellers are below the buyers. Do you notice the sellers are here, the buyers are above, the buyers are above, the buyers are here. This is micro, guys. The sellers are here, but the buyers are here. This seller is absorbed, okay? Watch. The buyers are above the seller. Buyers in control. Stop divergence. Clueless. Location. Full session VWAP. What's going on here? sellers below the buyers. Right here, the antenna is up very strong. And there's another piece. This is a micro composite volume point of control. And if you've been following the stream, you know what these things are. This is a intermediate time frame, high volume area. Trading is, you guys think of time frames, I get it. I think of both. I think of time frame and structure, but I also, in the intraday, I think of something called fractals. It's not based on the clock. In the intraday developing time frame, it's based on the sellers are here, the buyers are here. The sellers are here, they're under the bus. The buyers are in control. The sellers are here, which I don't know, until the sellers are here and they're under there. They were absorbed. What happened on the other side? These guys were absorbed. See the difference? Sellers absorb, go higher. Buyers go lower, buyers absorbed. So right here, I have a trigger. This is posted in TraderLab. I come back to the microstructure and I take a short. I know I'm taking a lot of time here. I want to show you how you might put pieces together. This is my target for a scale and then looking for it to fall out the bottom. Because what is the context? South of the border. Scale. VPOC migration. This is a problem. Right here, this is, remember, my scale, and this is my responsive buying. So all this is okay until this. Now, right here, let's look at the language of the market. Too low, and I don't know, looking for it to come through. Breaks here. My stop's up here. VPOC migration. What does it say? Language. It's speaking to you. And this is the ETH volume point of control. This is the highest volume from the ETH. Very important. I got to clear this because that's the retail price or highest volume in ETH. I don't do it. And you should hear me over here. So VPOC migration. Right here, the trade's in trouble. Here's what has to happen. Right here, I have to break under this, get through this, get through that, and, and right here, trouble in River City. So, the trade is scaled, and right here, you're saying, I promise I won't do it again. Watch. Where do we come? Support. Notice, do you see something here? Location, variable, high volume node. Same thing I just showed you up above. Now you're going to see something interesting. What you're going to see is something called auction market theory. And I always think of theory, that thing with Igor and Frankenstein, right? But it's not. It's shopping. If this is too low, price check in aisle 3, and we reject it, and there's the VWAP and the mid at the time, then this is your resistance. So we have resistance, trouble, break low, hope springs eternal, support, and once I come back, it's over. Okay? Now, subject to your plan, you'd hit the eject button, blow the canopy off, and out you go, or you just have a trailing stop and you scratch, or you take a few burgers, and off you go. Watch. Now, where's my next location, you ask? Here. This is all narrated in TraderLab. Now, watch. Liquidity comes in the book. Location. Clueless. Right? Not ignorant, just clueless. Watch. What happens here? Buyers. Sellers take a shot. Not so much. Buyers. They're in control. Oh, my goodness. But what do we know in the TraderLab that most traders don't know? This is too high from the ETH. Just like you see the migration, now you're seeing the same behavior. We check this, too low. Well, what's this? Maybe too high. Are you guys tracking? And I don't know. Remember, nobody predicts anything. If you do, come to TraderLab, clue us in. But location. Now I'm looking for a trigger. Buyers are here, selling icebergs. Liquidity runs in front of my location. In fact, we have one trader, Snuffle. I always ask him, how did you get that name? He sold 39-ish. I posted this trade against 40. So I just throw this out here and say, guys, observe 40. I don't call trades. You don't need to take my stop. So let's look at the change. Buyers, 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 liquidity, selling icebergs. I see the sellers. I get my sellers under my buyers. I have buy stops here. Watch the change. I come back up. Where do I come to? And how many buy stops are going off? 3. If I have 36 stops here, 1 stop there, selling icebergs across here, sellers below the buyers, this is a Trader Lab trigger. There you go. Hasta la vista. Thanks for playing. We're going to send you a ticket to the buffet, and off you go. This is a short. Now, where are we going to go with this? It's called mean reversion, and it's not, just watch it. Just see what it does. Watch the behavior. You can learn this. I'm not saying you want to. I'm just saying you could. Where are we trying to go? Here. Then, trade management. Watch. And there's more. You'll see. VPOC migration. What does that do? That. Where can I enter again? Against 40. And why 40? Location, location. Same entry. So, and what did this tell us? Rotation. How do you use it? Here's what you can do. You can exit. You can put it out again. Or, subject to your trade plan, you have a trade management process. This is another short. The sellers that were here said, oh, really? Here, have some more. Another short in the Trader Lab. 2 opportunities to get short. Is everybody tracking so far? This is Trader Lab methodology. It is an advanced trading process, but you can learn it one piece at a time. Are you guys interested in Trader Lab? What I've tried to do, and Bookmap has encouraged me to do, is create a trading community, and I post as much as I can because I am doing my own thing also. It's not easy to multitask, if you know what I'm saying. And I've tried to create a virtual trading desk. Now, it's not a trade calling room. It's a trading educational portal. And it's for traders who are interested in the business of trading and building a trade plan. Why would you have a trade plan? Because we're not playing a video game. A trade plan, you already know where your trades might show up. You don't know what will happen. You do know where it might happen. And now you have codified and created statistical probabilities. That's the work. The trading is the application of the work you do outside to create statistical probabilities. The casinos do not play games that don't have an edge, even though they can make up any game they want and they're going to have winning hands, but they're going to lose. So they only play games with an edge. Do you think if you're in a random environment that maybe only interacting where you have an edge might be to your benefit to create longevity, potentially, and a business? Trader Lab's about the business of trading. It's not about the business of gambling. It is, in a way, about what gambling is versus what edge is. That's our business. This is a structured trade, short to there. This is a structured trade, short to there. And if we get under here, hasta la vista, see you later. By the way, watch this behavior. Break low. This is your support. Pull back. Now, if this price is too high, now remember, that one's too high. If this one's too high, I break low. If it's too high, I break low. Sellers in control. What is this setup? Another short or not. Advanced methodology. You don't need it. It's just part of the joy. Now, statistically, and I didn't go into statistics, and you guys who follow the stream know there's a boatload of statistical probabilities that, of course, you have to vet. But there's over a 90% probability we're going to take out either the ETH high or low. Now, I don't know about you. I'm kind of leaning to the short side. Where is that? I don't even know where it is. There it is. Here. So this is the first target. And now let me clarify this. if I have over a 90% probability, past performance not indicative of future results, of taking this out, or the first hours, or the high, right, which is up here, could be either one, though I'm kind of saying, well, no, I don't think we want to get long. How about you? So then this. So here's how you might do this. And this is subject to your quote time frame or fractal. You could just put this thing on and sit back in the Barca Lounger and just scale, get risk neutral, leave your stop up here, because we are in a liquidating market with a global economic event. Not so good for the longs at the moment, you know? You'd be going here and you'd hang out. Or you are trading rotations as a rotational trader and you're trading chunks. And I'm giving you the or because that's not up to me. That is what you find through your work, through your vetting, through building your trade plan. I have found for me, and this is not a recommendation, I'm talking about me now, that the broader strokes cover the stops I take, inevitably trying to get positioned. Everybody takes stops, you take them, I take them. There's part of the world. It's cost of production and overhead, not a personal affront to you or me. What is this? If this is too high, this is the volume point of control, and I get VPOC migration, let's look at the language. Remember, no indicators for me. I speak a foreign language. Your indicators are translators. So, and we're doing the same thing. The difference is I'm doing it right there, because I already know what the language says. When this drops down, it says that's too high. Now, it doesn't mean, we won't go and take out the high of the day. That has nothing to do with it. What it has to do with is I understand the language. So right here, I have a buy sweep, which says counter rotation right here. Right here, I come across, if I come across, this is my resistance. There's my buyers. Here's a sweep. There's the buy stops. Here's selling icebergs, and I break low. This is a potential short right here. That's another trade. Now, it doesn't mean, of course, that it's your trade. I'm just showing you structured trades. And you can learn these. Now, this liquidity comes in over here. Notice how the passive order book and how the market responds to it. Now, because we have a high here, by the way, I forgot to mention this. You'll notice here a sweep. This suggests the potential for a downside rotation. Now, you had one here. There's your rotation. If you got short here, you either will take a stop or your stop has to be out above here. Up to you. Me, I like this. So right here, sweep, there's the rotation. What's the difference? That's the randomness of the market. Except this time, we're below a level that's auction-based, that's too high. That's the difference. Break, so we have short, sweep high. What does that buy sweep suggest? This. Coming down, I have a sell sweep. What does that suggest? That. And the liquidity jumps in the book at a nice even strike price, 55. Let's look at it. Sweep into the liquidity. What does it suggest? Counter rotation. Let's see what it does. Now, let's watch. So, sweep, counter rotation. What about this one? Sweep, counter rotation. What is this? This is a Trader Labs short. Right here, advanced process. Do you see the structure? I'm going to throw, guys, every day I do this in the stream, and I'm not going to try to do it all over the place. I'm going to just try to show you these things so you can understand and learn methodology. And the output of a consistent methodology is edge, not certainty. So we don't get the luxury of certainty in an environment where it doesn't exist. So let's look at this. Buy sweep, and let's say you look at this and you go, I don't know, which is what I'm always saying to myself. I don't know, because it's uncertain. Liquidity comes in here. There's my response to this. No clue, right? I come up, but where were my sellers? They were here. Microstructure, high volume. Remember, I'm talking about high volume here and there. When you start going down in what you guys think of as time frame, it's really fractal. If there's micro high volume here and it's too expensive, I leave it and then I come back and test it there. If I get a sweep here and my buyers are here and my sellers get below my buyers, it is a short. Now, if I can't activate here, how do I get in there? Does that make sense? And then I got to look at this because I have my buyers here for a scale ahead of this. So you get short here, you got a scale there. So let's just see. Support, watch, break. Now, watch this right here. Right there. What is that? This is an advanced Trader Lab process. Liquidity comes in the book. We had our sweep here, and this is our support, right? Buyers took control here. Sellers are back in control over here. Sellers take control again. We're underneath this, where we had our sweep and our counter rotations. There's this old saying, support becomes resistance. Buy sweep into this location sets up another short. Trader Lab process. You can learn it. Not saying it's any good. I'm just saying, and where's our next location? ETH low, 90% probability. You guys remember? So how do you operate here? Here's how you might operate. You're either taking chunks or you're using sell triggers and setups, if you will. They're not set up. They're called structured trades because they don't stand alone in the vacuum. There's other components to manage your trade. So you're either adding, scaling. You could be trading inside your own positions, adding, scaling, and having a core, or you're just managing. It's all up to you. And where's our support? In this, I posted this in Trader Lab, 75, 76-ish. Who knows? Right here, you could be done with this trade. And that short was from, depending where the initial short was up at 40, right? How many of these do you need? I'm just asking. Doesn't mean that, by the way, it's 40, and so what's that, a 60-point trade? Doesn't mean anything. All it means is you can learn this. The heat map, Gabriel, is the passive side, the limit order book. And, you know, with the heat map or anybody in the limit order book, it's like walking on a banana peel because you don't know if they're going to transact or if they're going to pull. So, you know, like everything in trading, it's not mechanical, it's informational. So it's a combination of pieces. Knowing what happened here and that we had our buyers, and if I get below the level and I come back to it, I can test it from below right here, and I add to that some of the insight that Orderflow provides, like a buy sweep. Notice this: sell sweep, counter rotation, sell sweep into liquidity, counter rotation. Now let's take the opposite: buy sweep into where the liquidity was down, buy sweep into liquidity, counter rotation. You see what I'm doing here? Does that make sense? Fino, yeah, hi. Welcome to visiting the Trader Lab there in YouTube. The IB is the first 60 minutes of RTH. And back in the Stone Age, when I first learned market profile, mid-80s, I think it was 86. I can't remember anymore. The first hours, back in the day, we had the floor, you know, and the rest of it. Most of the volume would go through in the first 60 minutes, and then we'd go to breakfast down to Manny's on Jackson. Everybody, you'd see all the floor traders. We'd all go down there, and I wasn't a floor trader. I was an off-floor trader, and but all my friends are floor traders. So we go to Manny's, so the volume would drop off. The idea was when market profile was introduced that if the range can be expanded past the first 60 minutes when most of the volume went through. And it's the same way today. If you look at volume distribution, it's on the open and it's after 2 p.m. Central Time, right? First hour, last hour. I mean, and it drops off during lunch. So the idea was if you can expand the range outside of the first 60 minutes, it meant that a higher time frame participant was active. That's what the belief was. And it created statistics. And those statistics at this stage are well known, but the fact is the market has certain things that happen. Now, just because there's a statistic doesn't mean anything. What matters about all this is what's something called context or condition of the market. And the context is currently down at this time. So there's our sweep, there's our counter rotation. Where's our resistance? It's here. Subject to, and this is an outside edge. This is now mean reversion in fractals. More advanced, very learnable. So this could be a short to there, this back to here, where the failure was, and the sweep into the micro high volume there, and the LVN is also a short back to here. Sell sweep. Let's see what it does. There's, you see the reaction? Liquidity in the book. This is how you use an advanced order flow tool like Bookmap. And I find that, and I started using this Bookmap, I think in 2015, maybe. You know, it's a little hard to, I mean, I don't remember exactly, but in there. And it actually, when I first started using Orderflow, I could never read the DOM, and I really wanted to. But all the ads and pulls and all the nonsense going on, I couldn't figure it out. So I was very frustrated by that. Notice what happens here. Let's come back and look. You see what happens here? Sweep, liquidity, counter rotation. All right. What do we do here? Liquidity jumps in the book. Sell stops are coming out. I'm always curious. Who's getting long? At least at this stage, right? And liquidity, see the right here, and I have icebergs are buying here. So I have icebergs and I have sweeps happening. You see these purple dots? That says the book is being swept. What do we see with sweeps? Sweep here, buy sweeps. I'm sorry, not that one. Sell sweeps, interaction north. Sell sweeps up here. And yet the trend is down. Liquidity here, sell sweep, sell sweep, sell sweep, swell sweep, sell sweep. What does that suggest? Up, maybe. And now we are coming into the first hour's low. And we have another, let's just take a look at this. Follow the yellow brick road. Now, what are we going to do with this? You're asking me. Same question I asked myself. There's your VPOC migration. Let's watch. What happens with VPOC migration? And I post this in TraderLab. Two possibilities. One, we bounce off, continue down, because we're at 930, which locks in the first hour's low. Over 90% probability we take out either the first hour's high or low. Good luck with that. Me, I'm leaning this way. How about you? You feel lucky, as Dirty Harry used to say, you're going to get long? It's your business, your plan. Me, not so much. What do I have going on here? Buy sweeps, buy sweeps. So I'm looking for counter rotation, and here's the possibilities right here. I come up here, I come here. Okay. Or I cross, and then I have structured trades. Here's what they are. And they're called mean reversion. Mean reversion is outside in trading. In other words, all of a sudden we go from the bullet train and we transition, subject to time frame, into rotational trade. It's a different plan in a plan. So if we think the context is still down, we have a stat with over 90% probability waving at us out here. Hey, the IB low is going over here. And of course, it's random. I get my VPOC migration. The language of the market is this is the new retail price. Everything above is too high. Liquidity comes in up here. And here's the following structured trades for this. Low volume node, outside in, it's called mean reversion. Low volume node, outside in, mean reversion, VWAP, and mid, which is called VWAP to VPOC trade. All these are shorts. They're all mean reversion. So those I already know are in my trade plan. Athen IZ, hi, welcome to the Trader Lab. Yes, the context is down. We're in a global upheaval. The market, and this is really continuation selling from yesterday's, let's call it debacle. And I'm referring specifically to the context and the condition of the market. It's not a political comment. It's just a financial one because we're trading a financial event. So, and it is a debacle or an opportunity to operate. Now, 5,500 is a strike price and liquidity comes in the book. Where's my trades? There, that's a low volume node right out here, and there, right? Structured trades. When this comes in the book, I'm looking for, this is called mean reversion. This sets up a short. Let's look at it. I posted this in Trader Lab. Nobody knows, by the way. We all take stops. There's my sweep. There's my location. There's some stops. Who's long? And selling icebergs. Let's look at this. I'm going to open this up and show you the trade. Now, buyers, location, outside edge, trigger, sellers are below the buyers, sellers are here, trigger. So there's a short here with a stop here. And then if we get a retracement, depending on your skills, you would be looking to get short in here, which I don't know if you could get. I don't know. Remember, we're going for the IB stat, 90% probability, which means back to here and then out the bottom. Well, wait a minute. Now, so this is a short. Now, I don't know if you could get in here. You have to be pretty competent. If not, it's not your trade. But I will show you where the next one shows up. Where's our targeting coming down? Remember the IB low. Here's the liquidity. See how it comes back in the book? Order flow. I get the sweep. What have we noticed with sweeps? This is a short. This is a scale. Now, this is advanced. You don't start with this, but you would learn this in Trader Lab. Again, there's different levels of proficiency that develop. And to start off, there's 60 PDFs of structured trades that you can download in the Trader Lab. There's a link in the bottom of YouTube if you're inclined. By the way, please give a like if you're getting some benefit from this. And here's your sweep. So this sets up a selling structure. This is where you have to scale and you're looking for it to fall out the bottom. That's the trade. Over 90% probability you take this out. Past performance, as you know, not indicative of future results. Watch. So there's your sweep. This is the beauty of Bookmap. I can open this up and see detail. Now, I can open it up to the point of crazy, like milliseconds. I don't need that. Liquidity here. See what happens? Buyers are absorbed. There's your icebergs. Sweep. Resistance. See this little high volume node? That is an auction. That's what you can't see this with an indicator. That's why Orderflow gives you potentially an edge if you learn how to use it and you understand auction mechanics, market mechanics. So too high, liquidity, sweep, buyers. This is resistance. Sellers are below the buyers. Of course, over here, sellers are below the buyers. Buyers try here, not so much. Trigger, short, advanced, scale, and then this. And this is posted in Trader Lab also. If you're in Trader Lab, I always think of it like a virtual trade desk. And it's not about calling trades. It's about education, asking you questions. What is the current context? Where's your next trade? This is your scale. Now, 90%, don't forget. Now, where's resistance? Here. That's the last sweep. The sellers are in control here. It's, by the way, the same sellers that are here, 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 right? Watch. Where do we come back? Here. What is this? If you're an advanced trader in TraderLab, it's another short or it's nothing. Now, watch. IB low, 90% probability. Breakthrough. Where's the next structured trade in the TraderLab? It's right here. It's called the IB continuation trade. Let's watch it together. This is a short in the TraderLab, right here. Right here. So there, here, liquidity comes back in, structured trade. Many traders in TraderLab took this. And what else is it in alignment with? Outside edge. Is everybody with me? It's called the IB continuation trade. It's in those 60 PDFs. Liquidity comes in the book at 60. This is my target. No clue. Don't think I know anything, because nobody does. Watch the behavior right here. Notice the behavior. Now, I'm not here I have a sell sweeps. So in here, my liquidity jumps in the book. Notice what happens here. Buying icebergs, and now I have buy sweeps. What do I get with buy sweeps? Downside rotations. What do I get with sell sweeps? Potential for upside rotations. I'm getting buy sweeps. So right here, I have choices. I can be out of this here, or I'm managing my trade, or I'm going for a structure that is auction-based that's left behind from last time we were down here, which is in August of 2024. The market has memory. Now, no clue. Watch. So this is where the buyers were, and the sellers are here. Okay? So right here, you could be done with this thing, or you're just managing your trade. Now, this is support. Resistance. Buy sweeps saying potentially lower. So going to zero, right? Watch. And again, no clue. What do I get? Let's look at what I get. Sell sweep. Does this look familiar? Now, right here, I see this, and I'm looking at this. I'm going, well, my resistance is here. And right here, so I have this, and I have this and this, okay? So all this is resistance, and subject to your plan, trade management, we're looking for this. And then you get this. You're out. Finito. Thanks for playing. Have a great time. I think VPOC migration. Watch. Now, you've seen this before. I'm going to come up for oxygen, guys. Thanks for your patience. And I want to get to real time if I can. But I think it's really important that, why do I do this stream? It's not to, quote, impress anybody. That's ridiculous. That doesn't help you learn to trade and create a business. This is not, one thing you'll learn in this business is humility. Ego has no room. What is this? VPOC. This is a structured trade in the TraderLab. Now I get this in here and they pull. I'm getting my buy sweeps and I have VPOC migration. What's the language? Too high. VPOC migration. Right here is very important. Here's support. Here's resistance. Now, again, advanced methodology. Not necessarily anybody's trade. It is subject to a potential short here. And then you're looking to come back down in here, down to here, actually, to this, down to here. What you would do is if you sold this, and this is advanced processes, you would be risk neutral. And then you'd be going for down here, and you'd get taken out of the trade. You'd scratch it, or you'd get a burger and a couple Cokes. I think now, this is your mid, this is your outside edge. This, now I'm getting into something a little different here. I don't remember. I haven't seen any of this, but let me explain it to you. So we have two structured trades in the TraderLab. Something called VWAP to VPOC, which would be from there to there. And you have the liquidity. And then mid to VPOC. So these are called mean reversion. They are outside in trades, and they're similar to what I showed you before, except, and the thing about trading, the randomness, of course, it's all random, but the behavior can happen at different locations. Okay? We don't know. So when we put a trade on, the idea is, for example, this trade is qualified. You take a stop. Let me show it to you. We all take stops, by the way. So what do I have? VWAP to VPOC is a structured trade. So the liquidity jumps in the book. I get my buy sweep, and right here is a short. Right here. You'd be taking your short here. Your stop would be right above here. So you take a stop here. Okay? Now, what am I seeing? The buy sweeps, the locations. Now I'm at the mid. What's at the mid? Stops. And if the trend is down, which maybe, right? We're looking for this. So the trade from here to here, which fails, next location, same trade, here to here. Now let's look at it. So I'm getting my sweeps. I got my stops out at mid. I do not personally sell the mid mechanically. I have found, since I used to do that early on in my career, developing career, oh, the mid, let's sell it. How wonderful. But what's at the mid? Stops. So I have a rule, and it's not a recommendation, it's just my own thing, that I don't step in front of the mid. I want to see the stops come out, and then I want to see stop divergence and whatever other elements and a trigger. Then I sell the mid, and then I go for mean reversion. So stop here. Stopped out, take a stop. Now what? Sweep, stop divergence, right? I showed you this at the top of the stream. 155, 1. So right in here, I'm looking for my trigger and outside edge. This is what's called mean reversion. That's the mean. So let's see what it does. This is a Trader Lab structured short. See the behavior? And you're going here. So that is a short, and I'm okay with that. Would you be all right with that? And that's for the scale, or you're done with the trade. Support is here, because we had VPOC migration. And then the idea is to try to come out the bottom and continue. And this is also a target potentially, but this is the main target. Let's see. Since I haven't seen this, all I can do is tell you about it. Oh, there you go. Now, let me see what's going on. There we are. And watch. Sweep here, liquidity here. Where did this come from? You're going to ask me. Whoops, it's right here. Somewhere. There it is. So this volume came from here, which was too high. This is also too high, variable high volume node. Let's watch the behavior here. Now the market is short. So here's the choices you have. You can still be trading on the short side, but the market being short, all the shorts in here are now getting squeezed. So your choices are go to lunch, take longs, or take rotations to take the stops out in the long side. You can trade from either side. For me, I'm fine just being in park. It doesn't matter. Or I'm trading more micro short rotations. For example, this would set up a potential rotation down, and it might just be shallow. And you can see it. There's your sweep. Here's volume, which is right there, and there, and there, and there it is. Is that making sense? Can you guys still hear me in Discord, guys? Okay, but the screen is not moving. Are you sure it is not moving? You don't see any movement on the screen? Is that right? It is moving. Okay. Guys, could be me. Maybe I fell asleep here and didn't know it. You know, I am in Costa Rica. Monkeys swing on the vine here. The internet goes down. So this is a short. But here, look at it. Location, location, location. Advanced methodology. The idea of this here. Now, this is not a trade anybody needs to take. Why would you even think about it? If you're developed and you understand what you're looking at, you could be taking this, you know, full session VWAP. You could just go there to there and then maybe back to the mid and back to, and all the way down here for mean reversion. Or you're just taking a pot shot here. This is, I call this subway purse snatching. If you've ever been on the subway in New York City, you know what that is. So you could just be taking this short from here to here. You know, that's a 10-point trade. That buys a lot of pizza, you know? How you guys doing? Please give a like. If you're interested in the business of trading, and this is not a plug-and-play business, let's just get real about this. There's no holy grail. There's no secret sauce or the only one thing you need. Let's get over the fantasy. Let's get real. This is not easy because of randomness. That is a psychological issue. The casinos are doing the same thing we're doing here in the Trader Lab. That is, they only play games that have an edge that favor them. That's why they don't make games up and they don't impulse in. And if they pay a gambler, let's say $100,000 in a suitcase and off they go, they don't change the game. They just deal the next hand. They're not attached to the outcome. What they are is disciplined, and they just play the game the same exact way. Now, for us, it is different structured trades, and if you think of them as games, they have to be played the same way. So there's conditions that must be met for the trade to qualify. There's a certain amount of range that is required for the trade to qualify. There's a certain risk management process which requires a minimum 2-lock configuration. So the first contract buys your stop on your runner, and then you manage your trade, and either you scratch or you manage the trade and you get an additional yield. So the idea is to have a process, and that over time you extract the edge. It's not the next trade or the next 5 trades. It's all the trades. And over time, if you have an edge and the discipline to execute your edge, you extract the dollars from the gamblers. And along the way, you pay the gamblers. That's the business. So if you're interested in the business and how to potentially create a business in trading, then come to Trader Lab. And you have to roll your sleeves up. And it's not going to be easy because you have to change your beliefs. You know, what you believe the business is. It's not time frames and indicators. Indicators have a place in this business, but the indicator is not the primary input. The primary input is the auction or what the market's function is, and that's to find out what's this thing worth. What's too low, what's too high, what's just right. That's why it rotates. And it does it in all fractals and time frames. So the fact we have an indicator that says what? I don't know what it says. Because one says get long, one says get short, one says call me later. Conflict. How can you operate with conflict and inconsistency as far as your inputs and then know that you actually have an edge? Most retail traders trade without edge, and they are getting random winnings because if you threw spaghetti against the wall, some of it's going to stick, but it doesn't mean you have an edge. So that means you lose. That's just the facts. So we have to change that, not try to fix a defective process. That's what hung me up for years, was I had all these winning trades, and that's just my experience, but I think it's pretty typical. And I'd say I want more winning trades. Let me make it better. Then you do all that work to make it better, and you get a little excited, and you start having winning trades, and then overall, you're still not moving the ball forward. because you don't have the edge. The other side has the edge. So this is location, by the way. There's a sweep. Now, there's nothing to do here. You don't have to do anything. But that's the business. So Trader Lab's about the business of trading and helping traders understand the environment they're in, and to try to help them overcome what might be defective beliefs. The fact we get a software package that has a bazillion indicators in it, you're going to spend your life trying to get the right mix. It's exponential. How many years do you have to try to figure it out? And even then, if you don't have an edge, it doesn't matter. It's going to be the same result. So that's the thing. That's why I agreed to do Trader Lab. Please give a like, by the way, if you're visiting. As a beginner, Athen, what are those red and green indicators? Is that an add-on? Red and green. If you're asking me, when you say red and green indicators, these are reading data from the CME. These are sell icebergs. These are buy stops. So buy, stop, sell iceberg. So I think that's what you're asking me. That is based on, because all orders have to be tagged. They got to know when you put an order in at the exchange, what is it? Is it a limit? Is it a market order? Is it a stop? Is it an iceberg? So they all have a little tags, timestamps on them. That's called MBO data. I hope that answers it. It is not free. It is an add-on. What am I doing in Costa Rica? Good question. The coffee is great. That's all I can tell you. Should you only take short right now? Look for a squeeze at yesterday's highs and short. This is as a beginner. As a beginning trader, I would suggest you come to Trader Lab because you got to kind of tear it apart and put it back together. I can't answer what you should do because what I do and what you do will not be the same. And there's no right way to trade. I think we have to understand the thing about trading is there's not a one size fits all. A lot of this has to do with psychological alignment. There are some traders in Trader Lab that are going to just take chip shots, from here to here. They're not interested in riding through counter rotations. There's other traders in Trader Lab that'll put this thing on at the high of the day and then go to the gym, and then say, well, come back later. There's other traders in Trader Lab who may be taking longs. Now, I won't take longs unless something materially changes. I'm just going to be taking shorts, but that's not a recommendation because my time frame, as you think of it, is different than other traders' time frames. So I just I do my thing because my thing aligns with me psychologically. I cannot trade somebody else's plan because they actually may have a plan that gives them a higher yield, but they're going to sit through 10, 15 point counter rotations to get that overall yield. My psychology doesn't allow me to do that because if I give back 10 points of open trade equity, it's going to impact me psychologically. It's really going to mess with my ability to stay detached. I've learned that about myself. So I had to modulate, you might say, my process to get in alignment with my psychology. And part of coming to Trader Lab is to learn about yourself. We don't know who we really are until we trade because the stimulus that is generated in an environment of randomness, fight and flight and all this kind of stuff is chemically induced. It is part of our reptilian brain, and we never really have to deal with it in the outside of trading world. It is a major impediment to intentionality. So let's say I create a trade plan that doesn't align with me, and there's a lunatic under the hood. I call it Hyde, Jekyll and Hyde. If you know the story of Jekyll and Hyde, Jekyll was a physician who was professional, highly proficient, terrific. And then Hyde was like his other side of him, a lunatic, just unbridled emotion. Well, chemicals released in the brain will swamp your logic and your intentionality because now it's primal, survival of the species, there's a predator. We cannot differentiate predators. We see counter rotations and risk as observing a predator. So if you're sitting short and you get something like this, you're going to bail out of it. Well, maybe, this trade hasn't failed, or maybe We come up here, you see the sweep, and you see a sweep here, but no trigger. And as soon as we come under here, you could be short again. And where you're trying to go is back here. If you clear this, you're going there. It's mean reversion. If you don't have a trade here, you don't do anything. You just sit back and go, well, that's interesting. Let me take a screenshot and see if I can find something in here that can create edge. This is structured. And it's also random, and we all take stops. I hope that answers your question. By the way, Maracona, I can't read that. So I hope you can do that in English. Please give a like if you're visiting in YouTube. Remember, these streams are available to Bookmap Discord Trader Lab participants. There's no application. Large cap, small cap stocks, options, crypto, order flow with a high tier tool like Bookmap. There's even coaching and mentoring in the Bookmap Academy. There's no cost for any of that. Algorithmic behavior, market maker behavior, go on and on. But the thing about it is, it's not you don't need to throw the kitchen sink at trading. For me, it is finding what speaks to me and then ripping out anything that's superfluous, because anything that creates conflict creates paralysis. So what do you need to be able to operate in a random environment where we have to take risk and we take stops that overall gives us an edge? And what don't we need? Way back in the Stone Age, I had indicators, used indicators. In fact, I grew up with them, and they were new. So, it was all very exciting. And I apologize for repeating things, but we have new visitors in YouTube and maybe Trader Lab. I worked with, shared an office with George Lane. He actually created stochastics, which is an oscillator. When I first saw that, I thought the Holy Grail did show up. The line crosses over. Look at that. It went up. And what did it actually end up being? Random. But I didn't understand statistics. I thought it was, let's predict. Let's look for confirmation. Yeah, Andrea, you're welcome. You are in Discord. I hope you're in the Trader Lab. If you're not, stop by, say hi. Remember, guys, the Trader Lab is a community of like-minded traders. It's available to all of you at no cost. There's 60 PDFs of these trades I'm talking about here. They're structured trades. Some of them here you can see similar behaviors, okay? And these are actual trades, and some are research-oriented. I work with Bookmap developers, and this is back in like 2020. And some of these are the trades I share here in the stream. What I did is I selected what I consider, and again, it's just me, bread and butter trades. Like, how do you start out? Where do you start? Well, you start with a basis of understanding, and it forces you to learn. It forces you to learn. And one by one, you only need one trade, by the way. Because what it's about is learning and developing and understanding of market mechanics. How does this work? Why does this market do this? Why might we get it short, here or here? Why might we do that? Why might the market come here, here, and here? Why, if I got short, and I might take a stop here, I would be risk neutral. This is just a way to trade. Doesn't mean it's a good way to trade. If I get risk neutral and take a stop, I'm going to scratch. If it comes back outside and I get another trigger, if my plan says so, I'll put the trade right back on again. I mean, I am a day trader. And then I'm going to go for the stops that are sitting right here. Do you look left? What is this? Longs in this leg have their stops there, 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 and here. Okay? If I take a short, where am I trying to trade to? Into their stops. What might I anticipate at the mid? Buyers. Why would I scale in front of it? Buyers. Then what? If we get a counter rotation and we run out of buyers, what happens to the stops that might be under here? And the VWAP, they get taken out. If I get under here, what's next? This. That's structured trading, and it's random. So, you just have to say, well, okay, If we don't know what will happen, we have to operate in an environment based on what might happen. And then based on an understanding of market mechanics, that's all this is. It's nothing more than that. And that I'm saying is, it's not complicated. Here's what it is. Random. That is the issue. Randomness. Operating in a random environment. How do you do that? Well, that's what the Trader Lab is about. That's the business you actually want to be in. 100% random, 100% of the time. You cannot solve for certainty, but you can solve for randomness. Which one are you trying to solve for? You see? I'm looking for confirmation. Is that what's going on in your head? That doesn't exist. That's not the business you're in. Or are you going to look for probability? That's different from confirmation and certainty. If you can't solve for certainty, what can you solve for? How about probability? Is that logical, guys? I hope it is. Please give a like. Let me know if that's logical. FN, what would I recommend to do demo trading? Well, I think if you come to Trader Lab, I would suggest you need a tool, whether it's an Orderflow tool or any trading tool that allows you to do sim. But before you even get in the market, you have to go back and do research. Use the 60 PDFs I share in Trader Lab, plus watch the library of webinars. There's no cost for that. Use that link, by the way, in the bottom of YouTube, and anybody else who's interested in learning the business. I've been trading going on 46 years, both professionally and otherwise. I've walked in your shoes, everybody. We're all the same because we don't know where do you start, right? What do you do? I don't know. You get a trading tool, toolbox, and oh my goodness, look at all these wonderful indicators. Let me figure out the right indicators and the right time frames, and I'm going to have an ATM in the basement. Well, maybe not. So where do you start? You don't start here. You start outside of trading hours, and you take the structured trades I've shared. It's going to save you years. And I mean years because it took me years to create those. And the pile of things thrown away is like a garbage dump, okay? Because that's how many things I worked on, some of them for years, that I ended up throwing away. The problem was they all had winnings, you see? So I spent time trying to make them better. Same thing you guys do. But in the end, it wasn't persistence. It was a defective process. I couldn't differentiate because of the winning trades. The process was defective, but the winning trades were there, which kept me being persistent. And that's what I think a lot of us end up doing. We stay persistent, but we don't have an edge, but we don't understand it. We think it's persistence. It's not persistence. It's process. So you might be trying to solve, when I mean you, I mean all of us, for the wrong thing. And that's why we don't get the results we're looking for, because we don't really have a solution. We're actually sitting on the wrong side of the table with the gamblers, and we don't even know it. That's Trader Lab. That's why I agreed to do it, because I wish somebody would have helped me when I started out. And I had no help because there were no off-floor traders. All my friends were floor traders. Notice where we just came, by the way. See? Doesn't mean the market's going to come here, but that is what the trade is. See? So if you knew this, not what will happen, can't know that. Forget about it. I really mean that. You cannot know. What you can know is why you'd be taking a short. And you would know why we're going for this. And you would know if we get under here, we might go there. That's what you'd learn in Trader Lab. And it's 100% random. But, and the but is, you can understand why. Not that it will, that it might. The best you have in this business is maybe. Maybe you'll take a stop. Maybe you'll get risk neutral. Maybe you'll come under the stops that are under here. And maybe you'll mean revert, and that's the mean. In other words, the retail price. How does the market work? What's too high? What's too low? Retail. Right now, this is the fair price, where the highest volume is transacted. If, and I don't know, not my job, if we have found too high, nobody knows where it is, good luck with that, then we can take out the stops here and come down here. That's this trade. This is a structured trade. Now, it's advanced. Doesn't matter. You can learn it. Doesn't mean you can execute it, and it doesn't mean anything. It means if you come to Trader Lab, you might be able to differentiate your outcome from most of the retail traders. And you have to do the work. Nobody can hand it to you. I can give you the benefit of my experience, which is the same as yours. I just had more time to make more errors because I did not understand the business I was trying to be in. There was no information. I started in 1980. We didn't have computers. We didn't have an internet. If you wanted to learn to trade, you bought a book or you went to some ridiculous seminar. And I did some of that too. And I got nothing usable out of it. You know, you always say, well, at least I got something. Nope, I got nothing. So, and nobody was trading off floor at the time, or very few. I didn't know anybody. It was all floor traders. So I really was out in the wilderness, and indicators were new. So I spent all my time with these indicators and then built trading systems to try to have more certainty, you see? And even though I created statistics, they were always backwards looking. That's what curve fitting is. So how do you trade today based on what happened, a month ago or 2 weeks ago? See what I mean? How does that work? It doesn't. At least it didn't for me. So I don't do it. Well, thank you, Rick New. I appreciate that. By the way, guys, come to Trader Lab if you haven't visited while it's still available. And I have to say this, it's not going to be available indefinitely. I'm not going to be doing this indefinitely. I've been doing it for several years, and you could take advantage of what's already been created. And by the way, Trader Lab's not about me. I'm just one like you. I've just been doing it longer, and you can leverage my experience and also the experience of the other traders in the Trader Lab. It takes a community to do this. We have traders who do data mining. We have traders who write scripts and code to extract statistics. We have traders that enhance and create other structured trades and share them in the community. There's a library of webinars that I've done over a lot of different topics. Let me just give you a brief peek at, and you've all seen the 60 PDFs of the structured trades, but this is what's going on in Trader Lab, you know. All kinds of stuff and trades are posted. A lot of stuff going on in here. A lot of leverage. You see, the idea of Trader Lab is the leverage. So there's more here, but a lot of good sharing. I do a lot. You can see I'm in here. I use a headset and it's text, speech to text. Sometimes it comes out like the monkeys are talking, but I try to stay active here, you know, build out a trade process, you know, structured trades. The idea of this is to understand you build a business from the ground up. And also, we've all created beliefs that might be not appropriate or in alignment with the business you're trying to be in. Here's what the structured trades are. The library of webinars. Start with this one. It's got about 33,000 views or 32-ish, somewhere in there. It's a primer. It gives you a high-level overview of the auction and market mechanics, just basically, what is this? How does it work? Then meet the Trader Lab. Trader Lab's advanced trading processes. It's not, when I say it's advanced, that doesn't mean that you can't learn it because it's advanced. Don't confuse advanced with what other traders are doing. Most other traders are using plug and play, thinking that that's what the business is. What's advanced about this is it is different than what most other traders do, and it's going to require you to actually learn how the market works. So it isn't, the indicator's not doing the work here for you. You have to do the work. And I look at this like a foreign language. You know, all I'm doing using order flow and an understanding of the auction, which is represented by the distribution of volume, I know what it means. I don't know what the market will do, so that doesn't change. But I've stripped everything out that is superfluous that creates conflict. And we all take stops. So that's not going to stop. Every business has overhead and costs of production. Meet the Trader Lab. You should watch that. Also, this one is an overview of the entire process. I just take a day and I talk about my plan, why, then I saw, in other words, it sets up the trades and then the trades. So you could see a snapshot of the whole thing. Then there's, you know, why most traders using indicators fail. It's important you understand that. And then trapped in trader Groundhog Day. That's me. Trader Groundhog Day was when, you keep going back and you try to fix it so you get more winners. But if you have a defective process, you'll always wake up in the same place. I came up with the term Trader Groundhog Day because that was me. I just spent years doing it. And what happens to most retail traders is they spend a lot of time and assets. They run out of assets or they run out of time. But they're in the same place. They never get past it. Trader Groundhog Day. If that's you, it's all of us. The white horizontal line near, I'm getting a question, what is this? This is a structure for getting short. And it came, by the way, remember, this is a short, right, guys? And where are we trying to go? Here, here. And if I get through, now I might get a counter rotation here. I anticipate that. So if I'm taking a short, I'm looking to, first of all, risk neutral, right? Stop has to be here or here. Doesn't matter. I'm going for the stops at the mid. I anticipate a counter rotation off the mid. Where are the stops? They're under here, right? So now so right here, the trade could be done. And once these guys, if I have my buyers and they fail and I have no clue, then I'm looking for this or not. Doesn't matter. So if you are using structured trades in TraderLab, this is short, this is a short, this is short. This is a scale or scales ahead of it to get risk neutral. You could be done with the short here and you're managing your trade. And if these buyers here who are mechanical, and they might be right, remember, everybody gets paid. If this fails, that's a VWAP, then here, that's a trade. And it's called mean reversion. Anyway, that's the white line. Van, I hope that really gave you some insight on that. No, Van, my sweep detector is not on automatic mode. If you come to TraderLab, if you have Bookmap and you have these tools, there's all my stuff is in there as far as my settings. And I'm not saying that these are optimal settings for anybody. You have to kind of, the idea with tools is no matter what they are, is you got to kind of get what you want to see. For me, I'm a minimalist. I don't want anything on my chart. Nothing. So anything that's here is material to me to be able to make a decision. And it's process based. So it's the condition of the market. If this, then that, the condition, which is down, then what? Then if I come outside, then I'm looking for mean reversion, which is back to here. So if the trend is down and I get a counter rotation, squeeze out the shorts, thanks for playing, then I'm going to be looking for shorts for what's called continuation trades to come down here. That's my plan. And I'm going to take stops because I'm going to try to pick these locations like here. Here's a scale and a scratch. Here might be a stop. Here, scale, maybe a scratch. Here, a short here, a scale, or a short here, a scale, back to here, back to here. And it's kind of like, you're in a rowboat getting tossed around because of volatility and rotations. The trade plan says go for this. And it's random. And I don't know which rotation is the right one. That's where we pay. But for me, if I have range from out here, Van, 17 to here, I can afford to take probes because I want to trade the range. And this is my trade. It's not a recommendation, but this is what I do. And this is what I share in TraderLab. Anybody can learn this. And it doesn't mean you can trade it. And I don't mean you, Van. I mean any of us. Because we have to start one piece at a time. Why wouldn't we be getting long at the mid? You see, a lot of traders are mechanical. Oh, it's going up now. I guess I'll buy the mid. No, I target the mid. And I'm trading the auction. I'm not trading lines on a chart. This is created by the auction. This out here is the auction. This variable high volume node is the auction. All of these are material. This is why it's a short. And this is why this is a target. Anyway, if you guys are interested in this, there's no cost. Visit TraderLab. You can pick up some ideas. And the idea, I tried to think of TraderLab, and when I was thinking about doing it, how can I mean, back in the day, I coached and mentored traders. We sat on a trading desk. Some of you wouldn't like it probably because, if somebody showed up late, they were sent home. You got to have discipline. And discipline is self-discipline. And of course, we're all adults here, hopefully. But the fact is, back in the day, when I did this, I managed a substantial book of dollars, and I had to have help because it was across a lot of asset classes. So I had to learn, and then I had to help other people. And everybody wants to be a trader. There's a fantasy, right? But the reality of the business is it takes other pieces. It takes being able to learn and humility, not ego. You got ego, that's an obstacle in this business because then you think you actually can predict something or something. What you need to know in our business, and this is for everybody, is that you don't know. And if you know you don't know, you have to relieve yourself from needing to know because you can't know. What you need to know is the same thing that casinos do, that over a random distribution of interaction with the gamblers, they extract the dollars from the gamblers because they're using anchored inputs. So they play the games exactly the same way, but they have no control over the cards coming out of the deck or how the gamblers play the cards. So they're in a 100% random environment. What's not random? How they play the games. So for us, the games are structured trades. That's all. So if you can understand gaming, now you know the business you want to be in. Now you got to solve for that. And this thing about confirmation and certainty doesn't exist in our business. So we can't solve for something that doesn't exist. And the catch of the whole thing is that we all have winning trades when we try to get certain. But if it doesn't have an edge, you're still going to lose. That's just the facts. Casinos don't make up games. They just play them the same way. That's what a trade plan is. So they have a game plan. You've heard the term game plan. Well, trade plan. It's all the same. Target. Okay. Now remember, Trader Lab's not a trade calling room. It's an educational portal. And so is the Bookmap server. There's a lot of additional education. We got a little sweep here. Let's see what it does. We're trying to go here, not a trade recommendation. So the short would be Van from up in here, or up in here, or up in here to there. I'm good with that. That puts pizza on the table. And that's my concern. Pizza, pint of ice cream for the movie Saturday night. And based on today and having a trade plan, there'd be a lot of pizza. I hope you guys are getting some out of this. Try to keep it light. Van, the white line that I have sell ice, well, there's sell ice here, but this is the key piece right here and here. So this is confluence. So this was the retail price from the ETH. This is the ETH mid. This is an outside edge of a distribution. The retail highest volume is here. The nature of the market and mean reversion is to come there. That's the trade. You can learn this in Trader Lab. I'm running out of time, guys. Please give a like on the way out. Subscribe to the channel, support the channel, and visit the Trader Lab. Use the link in the bottom of YouTube. It's open to everybody. There's no cost. And while it's available, you might want to check it out. Say hi. Download the 60 PDFs, all the structured trades, the document section. Start watching the library of webinars, and let's move forward together. You can do it if you make a plan and then learn where your edge is. That's the business of trading. Thanks, guys. Don't forget to give a like on the way out. Appreciate you visiting me today here in the Trader Lab. If you have further questions, come to Trader Lab, post them over there, and we'll do our best to clarify everything we can for you. Thanks, guys. Don't forget the like on the way out. See you tomorrow.